welcome to Bullion Bulletin, sir. Mr. Jeffrey Rhodes, we know him very well for a long years, but this time he has come with a new identity. He is now appointed as a CEO of Z Gold DMCC. So Z is a very popular corporate house in India, and they have a refinery called Shirpur Gold Refinery, and I feel Zef has taken the responsibility of that business in Dubai and Middle East. Well, I am very excited to know about your new role as a CEO of this G Gold DMCC. Well, what is this all about?
It's really kind of you, and thank you for asking me to appear. Look, I've been in the gold market for 35 years.
Right.
I've worked for bullion bank in London called Samuel Montague, now HSBC,
Right.
Credit Suisse, and then I joined Standard Bank in the mid-90s, of course South African bank, biggest producer of gold at that time. That was very exciting. And then I was at INTL and so on. And I've retired actually. I've been running a consultancy business, and one of my clients I was consulting to was indeed Shirpur Gold Refinery, and Mr. VK Agarwal, and I met the management of the Essel Group and was very impressed.
Right.
And somehow that evolved into developing a business plan to set up an operation in Dubai, and really to become a truly global player. Many big banks in India and big corporates are involved in bullion, but the challenge of taking an Indian-owned enterprise and turning that into a major global player in the precious metals sector is really exciting. I feel as though it's destiny. I was involved on the sell side. Now I'm very much involved on the buy side, and although I'm getting on in years, I feel as though this could really be the pinnacle of my career. So I'm very much looking forward to meeting and the rest of the colleagues within the group, and to developing a business that I hope the shareholders will be proud of.
So basically you will be involved in marketing the products that is produced in India? Or?
No, not really.
Not really.
Look, it is a separate business, completely separate business.
Okay.
And indeed, Shirpur Gold Refinery would be a client of Z Gold.
Okay.
DMCC.
Okay, the other way around.
In many ways, and many of the other refineries could well be clients of Z Gold. So the aim is to build a global footprint and be involved in every aspect of physical precious metals, and not just as an arm. It's fantastic to have within our stable of companies a physical gold producer, the largest gold refinery in India, and it's very exciting to think that I've got access to that material. But no, this is a much wider business, a separate business, but related.
So it has nothing to do with their refinery business, the new entity?
Not really, no. The refinery is a client.
Different entity.
It's a client.
Refinery itself a client.
Look, the Z Gold DMCC is 100% subsidiary of Shirpur Gold Refinery.
Okay.
Clearly. However, it's more a case of Z Gold providing services to its parent.
So what exactly are you looking now at the very beginning? What is your target?
Well, to build a business. When I've done this a number of times before, as you know, I set up and established and developed Standard Bank in Dubai.
Right.
I did it again with INTL Commodities in the DMCC.
Right.
So it's very much along the same lines. And as long as you have a strategy, as long as you have a long-term focus and targets, look, it's not easy, obviously, and many would argue that with gold having been in the doldrums for the last 2 years, is this the right time? In my view, it is very much the right time, because it's always been said, and certainly former colleagues of mine have said, that great businesses are built in difficult markets. and I think that we will build a great business. It's all about people. It's all about the corporate culture. I'm excited about the corporate culture of the parents, and it's about getting the right people and putting them in the right places. It's like building a soccer team. You have to have that the manager is simply the focal point,
Right,
but it's all about the players, and our business will be about the team that we build.
Right. So now we focus on more on the subjective matter. It's a business part we already spoken. So now at present, first question I wanted to ask about China.
Yeah.
So this devaluation of its currency, how are you looking at this particular aspect?
Well, look, I gave
How
it
much it could impact the gold nation?
it had a significant impact in two ways. Firstly, I think it wasn't a shock to the insiders, as it were, because the Chinese currency has been under pressure because China has had economic problems this year. But when the move came, and if you like, the severity of the move did shock the markets. Now, in a very positive way, certainly for the rest of the world, maybe not for China, in that it raised the spectre once again of currency wars. You know, this race to the bottom of the emerging markets and even established markets wanting to effectively devalue their currencies to make their goods and services attractively cheap. So to boost your imports and lower, boost your exports and lower imports. But it came as a shock. Now, the important impact it had, it raised a big question mark against the Fed's likely decision to raise interest rates in September.
Right.
And given the FOMC minutes that we saw on Wednesday, given the fact that we've seen fairly mediocre economic data coming out of the US, and I think the impact of that weaker renminbi, the weaker yuan against the dollar, and general weakness of emerging market currencies against the dollar has perhaps made the Fed's decision a little bit more difficult. Now, the decline in price that we saw in midsummer when gold went through 1135 in that famous bear raid that took gold to 1075. That was short selling. I think what we've seen this year, we have seen ETF holders liquidating positions, so you've seen that gradually fall away, and I think it got to the lowest levels since about 2009.
Right.
But the move from 1135 to 1075 was short selling. It was a bear raid.
Right.
And once the market held, and the physical markets of India and China definitely helped. I mean, we're coming to the end of the monsoon season, and when you see the physical buyers in the East are very smart. Very smart. They buy low, they don't buy high.
Right.
So they saw value in that, and I think that stopped it going down.
Right.
And already it was looking a bit shaky for those short sellers. With gold holding between 1075 and 1100, it was looking quite solid. We then saw the China news, we then saw the FOMC minutes, then suddenly all bets were off for the shorts, and we've seen this massive short covering rally. It's actually taken gold up about $90 as we speak since that low. So now I think, and it's galvanized the market back into action, and I think it sets the scene for a very interesting end to 2015.
So I want to ask on this particular point, this total fall of gold, if I take it from 2011 to till date, so do you consider, if I see the other commodities are also coming down, like crude, like copper, everything. So do you consider this is more of a gold selling rather than it is more of a commodities basket selling as a whole?
Look,
how you consider this whole thing?
I don't consider gold to be a commodity at all.
Okay.
I don't. I do agree that the gold, the precious metal sector, gold, silver, platinum and palladium, has been caught up in the general wave of selling in commodities this year.
Okay.
But it's not a commodity. Look, I think when we saw gold rallied to 1920 in September 2011. That started when gold was 255 in July 2001. Okay, and although there was some dips in the price, it really was a bull market that lasted from 2001 to 2011. We then saw a reversal, and why did that happen? Because of the concern about the global financial crisis. Financial institutions were no longer trusted, currencies were no longer trusted. There was a general unease, and there was this wave of Western investor buying of gold as a safe haven. Over the last couple of years, we've seen the US economy improve significantly. the global markets have stabilized, and so the world was looking a better place. And so a lot of the investment into gold from the West has been liquidated. As I say, ETF holdings lowest level since 2009. But nevertheless, I think there was this paradigm shift from like 255, 1920. Interestingly, the decline to 1075 represented a 50% retracement of that move. Now, technically, and it held very well. So technically, gold is in a much better place today than it was 2 months ago. I think you've seen the bottom for the year.
Okay.
Interesting, I have to tell you this, sorry to blow my own trumpet. At the start of the year, and I believe you get my price predictions.
Right.
The low prediction I made in January was 1075.
Right.
Can you believe it? We went to 1075. So I think we've seen the low now. And I think the market is solid on the downside technically. I think it's solid on the downside from the physical aspects. So I think now the focus for the rest of 2015 is going to be more on the upside. So I would say I'm cautiously optimistic for gold for the rest of this year. I don't think it's going to go crazy, but I do think you're going to see the gold price at the end of the year higher than at the end of 2014.
So in case this level is broken, only for argument's sake I am asking, if this 1075, 1050 level is broken, so how much gold can come down?
I don't think it will be broken.
Okay.
So you can, I can say any number you want.
Any number you want.
But I don't believe it.
I just asked because if you have any number like that in your mind.
Look, you know, markets are dynamic.
Yeah.
Okay, they're ever changing.
It's surprises.
And situations change. Anything can happen. I personally think you're more likely to get a shock to the upside than the downside. Okay. Look, this year, everyone has been talking about gold going down.
Right.
Everyone talks about gold at 1100. Right. When it was 1200, 1250, 1300, everyone was waiting for 1100. And would there be buying? The question was, would there be buying at 1100? Indeed there was. And I think now that's gone. That phase of the market this year is over. As I say, I think we're going to consolidate, and we could see gold consolidate maybe between 1135, 1140 and 1180 for a period of time, but I think it's more likely to go up. A question was asked of me today, what happens when the Fed do raise interest rates? Well, that's in the market. It's been in the market for 2 years.
Right.
Everyone's been talking about it. And I think unless there's a big shock that the Fed hikes interest rates by 1%, then another 1%.
These are all imaginations.
No, that's fantasy.
Fantasies.
What they'll do, and Janet Yellen is on record as saying, they will tweak the market. They would just gently change course. Again, I was explaining the way they approach, the way Yellen approaches managing the economy of the US. It's like driving a Rolls Royce. You know, a gentle hand on the steering wheel, slightly going here, slightly going there. They don't drive it like a Ferrari. They're not doing this. They're running the economy and I think the outlook for the US economy is good, but I think there's room actually in the global world of currencies for a strong dollar and for a strong gold. A strong gold, not as an alternative to the dollar, but as an alternative to other currencies. Certainly, if you were in Russia and you moved your money from rubles into gold, or if you were in Greece and moved your money from drachma or euros into gold, you'd be very happy today. So I think there's room in this market for a strong gold and a strong dollar.
If I say this is the reason for why people should buy gold, because 1100 is fine, but why I should buy gold? That is also an issue.
Well, you should buy gold as part of your portfolio. Gold isn't speculative. Okay. I've said this to you before. You keep up to 10% of your portfolio in gold. Okay. When times are difficult and you're uncertain, you might go a bit more, but roughly 10%. You might go down to 5%, but you should always own gold. And guess what? When you own the physical, when you own the jewelry, it's what I love about India. You don't sell it.
Certainly.
You don't sell it. No. You may need to use it And the great thing about gold as a store of value, you can raise finance if you own gold. Even look at the authorities in India at the gold monetization scheme. This isn't telling people to sell their gold, it's telling people to maybe put the gold on deposit and put it into a financial kind of aspect so that you can make use. So I think the benefit of gold is I would never sell gold. You know, honestly, over the years, in terms of coins, in terms of small bars, jewelry for family and so on, never have I sold. And I never will, and I don't think you ever sell.
How you perceive as you mentioned GMS, how you understood the whole concept? Obviously, the scheme is really good. If we can unearth some, I am not looking at 20,000 tons gold to be can be unearthed for and recirculated in the financial system. At least something can be done. So how are you perceive the whole thing?
Well, look, the
procedure way what
the notion
is demarcated.
And the notion and the strategy of monetizing gold holdings that are not in the form of money, not as a kind of financial instrument, but sitting there. The concept is excellent, and I really do support it. Clearly, the detail is what's being talked about now and what's being thrashed out now. But frankly, if you took the gold holdings in India, in private hands, across India, and you actually added that to the net wealth of the country, India would be up there in like the top 5.
Right.
So no, I think the principle I completely support. The actual details, that's being discussed, and certainly a conference like we're at the moment is a very important forum to discuss actually what should or could be done. But at least, you know, congratulations to the government. I mean, it seems to me as an outsider, and now of course I'm not an outsider, I'm an insider working for an Indian company. I think, you know, there's been a lot of criticism leveled at the authorities over the years, but currently I think they're doing a great job. You know, I live in Dubai, and Mr. Modi was in Dubai. Just visited UAE, Abu Dhabi and Dubai. Yeah. He's like a rock star. I mean, he really is. I mean, the expat community there were thousands at a soccer stadium.
Yeah,
it was like
70,000.
It was like the cross between a rock concert and a sporting event. And he held the crowd absolutely captive, and I think
he did the same thing in United States also.
Yeah, look, and I think India is making fantastic progress. I believe it's the fastest growing country in the world in terms of GDP, and from my perspective at least, it is the number one gold consumer. I do believe that. Right. Whatever the numbers say.
You always consider India.
India is number one, and that's why for me it's like a date with destiny. That after 35 years, I'm now running a business in Dubai as an Indian enterprise. You know, part of an ESOL Group enterprise. That, as I say, I feel as though I was destined to do this throughout my life. So after a long and varied career, you know, I feel as though, funny enough, I feel as though I've come home.
Actually, UAE government requested Mr. Modi to why we are not decreasing the import duty, because it is affecting their export to India. So that is also issue came to the newspaper.
But it's interesting, although obviously, you know, it's 10% import duty, and maybe it will go up, maybe it will go down, but it will not stop the love of gold by Indians. That's the thing.
That is the same language Finance Ministry is telling. We have increased to 10% duty, but did you see there is a decrease in demand? No.
Yeah, but guess what? India as a country is now benefiting from that. It's learned to live with it. And this is the great thing about Indians. I mean, you're so kind of flexible and such entrepreneurs that whatever the situation, you will just work with, you know, you'll play the cards that you're dealt and play the cards to the best of your ability. Honestly, I had no hesitation whatsoever to take on this new role because of the dynamics that you see here. And you know, I'm a gold guy. I don't know why I'm a gold guy. I mean, I don't know why I started 35 years ago in gold. It was more by luck than judgment, I think. But you know, for me, it's this is like, as I say, it's like second home to me, and I can't wait to really build this business.
100%. So, are you seeing, and now I want to ask one last question on the Middle East. So, there are a lot of unrest in the Middle East, that is, so many things happening in Iran, Syria, those things. So, is there any impact of that political unrest on that part of the world? On the gold segment, I have actually no idea.
Yeah,
is there anything?
In a way, yes, but not in the way you frame the question. Is like, is this geopolitical unrest impacting the market? I don't think so, but it is impacting the market in such a way that, for example, Iraq is a big gold market, but because of the situation there, it's really been closed down. And so the flows of gold into and out of Iraq have really stopped because of the geopolitical situation. I think Syria and so on, it's closer to Europe than it is to Dubai. But the interesting development is the situation with Iran. And you know, if the development that we've seen over the last few months really carries on, and Iran comes fully back into the fold and sanctions really go, and that Iran becomes an important trading center, it would give a massive boost to Dubai, of course, because you know, I don't know anyone who would be involved in Iran at all, but if they could be, they would, because it's a massive gold market. And I think that Iran coming in from the cold and becoming fully fledged part of the international community actually would give a significant boost to the gold sector in Dubai.
Okay. So at present, what is the current development? I mean, there is a big impact because of this duty structure between India and Dubai. So what are the new market Dubai is looking at? Africa is obviously one part.
No, that is a challenge, I would say. I think Dubai in very much is an offshore center for India, and the vast majority of the population are Indian, and so that same kind of entrepreneurial spirit and playing the cards that you're dealt very much is prevalent in Dubai. So I would say the flows of doré directly to India that may previously have gone through Dubai definitely have an impact, but something will come along to replace that. Now, I don't know what it is, but something will. Look, if we get gold up in the sort of $1,400-$1,500 area, which is not out of the question, I think you'll see a flood of scrap. And that scrap will go to Dubai. It won't go to India because the rules in India are not set up for scrap. They're set up for doré. And so if we see a rally in the gold price, I think that you'll see a significant flow of scrap, and that will go into Dubai, and it will go into the refineries in Dubai, and then that will come to the wider market. Yeah, so I think that geopolitically, positive developments in Iran could be give Dubai boost, and secondly, if we do see a significant rally in the gold price, that would give Dubai a boost. And also, you know, in terms of doré flows, you know, the import duty structure, if like incentives, are important, but it's not the only reason. It's not the only reason why you would send your doré and where you send it, because you know doré will still go to the refineries in Europe and in Asia and the US, and some of it will still go to Dubai. So, no, I'm very optimistic, but I'm always an optimistic person. I always think there's opportunities around the corner, and so Dubai has got a history of really evolving, and as market situations change, adapting to those markets. So as optimistic as I am for the Indian gold sector, I'm equally optimistic for Dubai.
Thank you, sir. It is always a pleasure to talk to you, and I can certainly talk hours, but I don't want to.
You're welcome.
It is Jeffrey Rhodes from Z Gold DMCC, and congratulations and
thank you.
Good wishes from me.
Thank you very much. Thank you, sir. Thank you.